Crypto promises quick riches. Many are drawn to this call. It feels like a new world. A digital gold rush, they say. But the map is mostly blank. Unseen dangers lurk everywhere. Few truly understand the game. Volatility is the core of this game. Prices dance wildly, up sharply one day, down sharply the next. This creates a thrill for some. It also creates immense stress. Your brain is not designed for this. Crypto offers very little certainty. Understanding this simple truth is the first crucial step. Fear is a very powerful driver. It can cloud your judgment and make you act irrationally. In the world of cryptocurrency, this is especially true. It often makes you sell low, driven by the panic of seeing your investments plummet. The fear of losing everything can be overwhelming. You see the charts turn red and your heart sinks. Every drop feels like a personal failure. Panic begins to set in. You start to question your decisions and doubt your strategy. Your ancient brain screams danger, flee. This primal response is hardwired into us for survival. This instinct served your ancestors well, helping them escape predators and other threats. However, it does not serve you well in digital markets. The same instinct that once saved lives can now lead to financial ruin. Reacting from fear usually leads to losses. Instead of making calculated decisions, you act on impulse. Greed is fear's close cousin. It can be just as destructive. It often makes you buy high, driven by the excitement of potential gains. You see the charts turn green and your optimism soars. Every rise feels like a validation of your choices. FOMO, fear of missing out, arrives. You worry that if you don't act now, you'll miss out on huge profits. You start to imagine future riches, picturing yourself as the next crypto millionaire. You chase the rising price, hoping to catch the wave before it crests. This is a common path to financial pain. The market can be unforgiving to those who act on emotion. The market loves to punish latecomers. Those who buy high and sell low often find themselves with empty wallets and heavy hearts. You must have a plan, a clear written trading plan. Define your precise entry points. Define your precise exit points. Define your maximum risk per trade. Write all of this down. Then you must stick to it, like a pilot follows a checklist. No emotion should be involved, just calm, rational execution. Use stop-loss orders, always, without any exceptions. This is your financial safety net. It limits your potential losses. It protects your precious capital. It takes the emotion out of selling. Consider a man named John. John was an average guy, living an average life. He had a stable job, a decent apartment, and a small circle of friends. But like many of us, he was always on the lookout for that one big break, that one opportunity to change his life forever. One day, he heard about a new meme coin from a casual friend during a weekend barbecue. The friend was excited, claiming it was the next big thing, a chance to get rich quick. The coin was soaring high, with prices climbing every day. Social media was buzzing with success stories, and everyone seemed to be making a fortune overnight. John, caught up in the excitement, decided to put in most of his savings. He transferred the money without a second thought, driven by the fear of missing out. No real research was done, just pure FOMO. He didn't look into the coin's fundamentals or the team behind it. He just wanted in on the action. The price climbed even more, and John's investment doubled within days. He felt a rush of adrenaline, a sense of validation. He felt like a financial king, invincible and wise. He started to believe he had a knack for this, that he could turn his modest savings into a fortune. He told everyone he knew, boasting about his newfound success. Friends, family, even co-workers heard about his incredible gains. He dreamed of buying a new sports car, maybe even a house. The possibilities seemed endless, and he was already planning his future. Then the inevitable dip came. The market started to turn, and the coin's value began to drop. A small one at first, then larger. John held on tightly, convinced it was just a temporary setback. He watched the screen anxiously, hoping for a rebound. It will surely go back up, he told himself. But it dipped much more, and his confidence began to waver. Fear started to creep into his mind. The once promising investment now seemed like a looming disaster. He finally sold at a massive loss, unable to bear the stress any longer. The dream was shattered. The FOMO turned into deep regret. John learned a hard lesson about the dangers of impulsive investments and the importance of thorough research. Antifragility is a vital concept. It's not just about bouncing back from adversity, but about thriving and growing stronger in the face of challenges. Imagine a muscle that gets stronger with each strain, or a mind that sharpens with each puzzle it solves. This is the essence of antifragility. It means gaining from disorder. When chaos strikes, instead of breaking down, you find ways to adapt, to learn, and to emerge even more resilient. Not just surviving stress or shocks, but becoming stronger because of them. Think of it as a form of evolution, where each challenge is an opportunity to improve and refine your skills and strategies. How can a trader become anti-fragile? The financial markets are a perfect playground for this concept. It starts with accepting randomness, embrace the uncertainty and unpredictability of the market. Markets are inherently chaotic systems. Predictability is an illusion. Trying to control every variable is futile. You cannot control the market. The sooner you accept this, the better. You can only control your response. Your mindset, your strategies, and your actions are within your control. This acceptance is the first step towards strength. It's about being proactive, rather than reactive. Small losses are your best teachers, if you let them be. Each setback is a lesson in disguise. They are valuable data points. They provide insights into what works and what doesn't. They show you what does not work. More importantly, they guide you towards what might work better. If you learn from each mistake, each small sting builds your resilience. It hardens your discipline. Over time, these small lessons accumulate, making you more adept and prepared. It makes you a better, tougher trader, one who is not easily shaken by market fluctuations, not weaker but more robust. Embrace these lessons. They are the building blocks of your anti-fragility. Many traders seek a special edge, in complex indicators, or secret algorithms, or they chase after insider news. These are mostly illusions. If they are real at all, they are fleeting. They do not last. The true, sustainable edge, it lies within you. It is not external, it is found in your mindset, in your psychological fortitude. This is the edge that endures market storms. Patience is a genuine superpower. The market often rewards patience. Most people are terribly impatient. They want riches immediately. Now.